All right, everyone. Welcome back to another episode of Bell Curve. Before we jump in, quick disclaimer. The views expressed by my co-host today are their personal views, and they do not represent the views of any organization with which the co-hosts are associated with. Nothing in the episode is construed or relied upon as financial, technical, tax, legal, or other advice. You know the deal. Now, let's jump into the episode.
Hey everyone, we've got a great episode here, but before we do, I just wanted to give a quick shout out to Permissionless. This is the biggest and best conference in all of DeFi. It's the one that we do with Bankless, who's a great partner for us. Last year, we had almost 7,000 people there in West Palm Beach. We are moving this year to Austin, Texas, from September 11th through the 13th. And if you are a listener of Bell Curve, any of these last 5 seasons, this conference is basically custom made for you. We're going to be talking about liquid staking, the theme of this season. We've got a bunch of great panels on MEV. If you listen to the app chain thesis, we've got a bunch of Cosmos folks out there in full force. We're talking about the converging architecture of Solana, the roll-up space in ETH, and Cosmos. So I would love to see all of you there. And to reward you for being such great listeners to Bell Curve, you get a special 30% off code. It's BellCurve30. That'll get you 30% off tickets. Click the link in the show notes and then head over to the Permissionless site and make sure that you get your ticket today. Again, that is BellCurve30. Click the link in the show notes. All right, everyone. Welcome back to another Bell Curve Weekly Roundup. You got Michael's 1 and 2, Vance, and Yano. Guys, good to be back. It's been a while since we've got the whole gang back together.
It's been
Back.
2 weeks.
Yeah.
You can tell who's living in who's living in hot New York right now and who's living in probably cold San Francisco, huh?
Dude, fucking freezing here. It's cloudy. It's like
You gotta dress like it's November.
60 degrees. Yeah. And then in November, we dress like it's just absolutely freezing.
Meanwhile, Mike's
city
going to
is
the
a
beach
swamp.
later today.
Swamp. Yeah, look at this. It's like 105 degrees. There's a heat warning.
Get your Hawaiian
Disgusting.
teeth on. Jesus.
Yeah. Yeah.
How's it going over there? How's New York?
It's really
Booming.
hot, but
Yeah.
other than that, it's booming.
Trash smell, that hot trash.
Yeah. For
Mid-July.
some reason, the weather in Paris I thought was going to be brutal, but it was really nice. All their workers are on strike, but somehow ours is the one that smells like trash and it's just like a general disgusting mess. But
Paris
yeah.
is great. Love
So
it.
I heard, I've actually read an article about the cleanup that's going on in Paris right now to get ready for the Olympics next year. Apparently, they hope that by summer 2024 for the Summer Olympics, you can actually go swimming in the river in the Seine.
Okay.
It'll be the first time that it's available for people to go swimming in 100 years.
Wow.
Next summer. Let's take a little dip.
Wow. That's bullish Paris. Vance, I'd be curious to get your take. What did you think of EthCC? Like any big takeaways from the conference?
I thought generally it was a great conference, really good vibes. A mixture of kind of like OGs from previous cycles, but also a lot of young new kids from frankly everywhere. A lot of people from Europe. I also met a few teams from San Francisco of like 21, 22-year-old kids who are just excited and kind of have that like first cycle naivete about what they're building and what they're going to do. And you kind of need that. That's like a function of just, belief in the space. And I think that's great to kind of have new people in the industry. The other thing that's striking every time I go to a tech conference in Europe is just there is no domestic technology industry. And Mike, we talked about this a little bit, but I feel like Michael and I, and probably you guys to some extent, like kind of starting our careers in California, most of the people we knew who had like made money, who had, nice houses, like they either had worked in tech companies or had been acquired by tech companies or started a startup. And there was like a very robust ecosystem for us to go from tech company to startup or venture firm or raise capital and kind of like go on that journey ourselves. There really is nothing of that same version in Europe. There's no large tech companies. There's some, but there's no real domestic startup industry. I feel like if you ask, an average person in, a millennial in France, that's probably, a young guy like us, like, how did your friends get wealthy? They wouldn't say technology. They would say crypto. Like for them, crypto is like the Super Bowl of everything. It's not as much about kind of like the Y Combinators or like the raising venture money. Like crypto is kind of the be all end all. And I thought the attendance at EthCC kind of bore that out. But also you have kind of like this like cryptographer cyberpunk vibe that you don't really get in the US. Maybe it's a little bit more present in New York, but like it does feel like there's more of like a emotional commitment to the ideology of crypto, just because that's been the centerpiece of, young people making money, young people building things. And I look at like the OGs that we kind of met or saw around there. Constantine from Lido, he's Eastern European. You have Rune, he's from, I think, Denmark, Copenhagen. Kane, a little bit different context, but he's like from Australia and is in Europe a bunch. But it's not as American as a movement, especially in like the OG kind of centric circles. And I thought that was pretty interesting. So very bullish Europe, very bullish. EthCC will be back. Definitely going to make it a cornerstone of our trips in the future.
I have a thesis on that, which is that people who come into crypto in the US oftentimes come in it for the money right away. And so then when the money gets tough, like in a bear market, a lot of people get wiped away. But if you actually look at Europe and specifically Eastern Europe, so I first time I heard about Bitcoin, I was living in Budapest, and it wasn't even introduced as a thing that you could make money on. Yeah, Mike knows this story. It was basically, the story was just like, my parent, all these Hungarians, their parents lived under Soviet Union, communist regime, and they were used to like growing, Hungary, 1950s, 1960s, horrible place to be after the war. And, if you go on like the trams, for example, in Budapest, nobody talks. And the reason nobody talks is because there's like, their parents remember when there was like mics and video cameras that would be watching you. So the way they thought about Bitcoin and the way it was introduced is like self-sovereign money. It was very like ideological. So then when you go into, so if you come into the industry for an ideological reason, when a bear market happens, it's the ideology hasn't changed at all. Whereas folks maybe who come in New York or San Francisco, very, very volatile emotionally, because you ride the volatility of the prices.
Yeah, I had lunch with like this crypto whale. Just won't name him for privacy sakes, but just even the way he was talking about kind of how he thinks about money and his stack is very interesting. He's like, yeah, I have all my coins, and then I have some stable coins, and I'll diversify my stable coins at some point. But like, why would I ever sell my coins? It's like, Americans are usually just trying to get back to real dollars, but it does feel like there's more of the emotional commitment to the ideology, which is cool. And even the characters, like the pink hair, the long dyed beard, the cryptographers that are trying to make, something private and secure to the nth degree. It's cool. I love having that in crypto. And I think the US brings more of the consumer, more of the TradFi experience to it. But to your point, Yano, like when things get bad in the US, you can rotate to AI. You can rotate to, building a consumer app, a fintech app. Like you don't have to stay in crypto. Europe, like the options are a lot slimmer. And for all of the beauty of Paris and what I thought was just like an absolute jumping conference, I looked at this Wall Street Journal article. Paris house prices are down only for the past like 10 years. Like there is no domestic tech industry that's kind of like pushing everything up. It's like only crypto that really is the wealth generation vehicle there. I was asking someone, I was like, some guy from Spain, I was like, how many unicorns are there in Spain? He's like, well, there used to be one. It was the food delivery app, and we're not really sure if it's still a unicorn. So it's like that's kind of what you're working with over there. It's just very different from the US, where I think there's like 1,200 unicorn, or at least there used to be.
I have a question on the content for you guys. If like the Twitter talk was, in the kind of recaps was like, oh yeah, everyone's building infrastructure, no apps, everyone's building infrastructure, and I feel like that's a thing people like to say in all bear markets. I'm sure that was true. I'm sure everyone was talking about infrastructure, not really the apps. Do you guys think that is a problem at this phase of the industry, or that's just look, that's where we're at, is the infrastructure phase?
I think it's not a problem, but eventually I think there's a middle ground. And one of the things I kind of feel like about apps versus infrastructure is there's, first of all, obviously there's a lag in between infrastructure and apps, where you actually need good infra to build the apps. And so it tends to lag like, 6 or 18 months or whatever it is. But the other thing is there's kind of this like chicken or egg problem when it comes to this, which is that in order to build good apps, you need infrastructure that'll support those apps. But ultimately, the infrastructure should be in service of the apps. Like you need an app that has product market fit that will tell the infra guys like, hey, this is actually what I need to build. And what we're lacking is that one thing, right? That will like give the infrastructure providers, it's like they're trying, it's very exciting, right? There are all these different takes on infrastructure. Like just to give you a sense of the moment in time that we're in, there was a conference called Modular Summit, which was awesome. It was great. But like, that's literally, it's like the nerdiest thing ever, right? It's like, do you build a monolithic stack or modular stack and like switch components out? Like, it just shows you the sort of moment in time that we're in right now. And I think what these guys are sort of lacking is like, one, like, there was a great app. This was the stack that supported it. And like sort of this idea to rally behind that. I think what you're starting to see is really good entrepreneurs building a product like an app and then supporting infrastructure around it. And you see that on the layer twos. So like ZK Sync and ZK Era is like their version of the L2, but then they're going to build a stack that will allow different apps to build like their app specific environments with different modular components they could shift in. So it's kind of their bet that like, this is how we think it should be built. But like, by the way, here are all the components. And like, if you want to change some stuff, you could build it custom the way you need it too. Scott Sonardo, Argus Labs guy in gaming, is actually very similar to this. He's got like a game, but then he's also building this set of developer tools where it's like, this is kind of how I think the infrastructure should look, but there's enough flexibility where if you wanted to customize it, you could do that as well. So I kind of think it's like not a huge problem, but it definitely was very infra heavy. And to say the obvious thing, it would have been nice to actually see more app.
You could make the argument Kane is doing the same thing in synthetics, right? With synthetic, they've built the protocol for liquidity here, and then now they're also building Infinex.
Yeah.
You're not going to see a lot of app developers at the infrastructure conferences, though, just as a rule. You're going to see them at the gaming conferences. The DeFi people don't really get invited to the TradFi conferences, but like, it's like, it's a bit of just, you're never really going to see the apps there just because that's not who they're being built for. But I also think there's this other concept of, would you call liquid staking an app? Would you call, stablecoins an app? Like I would probably call those like money apps in some ways. It's not going to look like one-to-one. I think there is like this prototypical, we know what an app in Web 2 looks like, and therefore it will exist in Web 3, or it should at least. I think they're coming, but they're mostly going to look like games. But I feel like people want us to build like photo sharing on chain, and that'll be like a killer app. And it's like, it's just not really the form factor of the technology. But we see a lot of apps getting funded. I will say that. Like, we see a lot of infrastructure at the conferences, but there's a ton of games and weird consumer apps that are raising rounds, and I'm pretty confident they're coming.
Yeah, they're definitely coming. I would also say I think we're just at that point in the cycle where they either have been funded and they're building. Like, there are tons of games that have been funded and are building. But if you're starting a new game from scratch right now and you need to get some seed capital to get off the ground, or you need to be able to build a team of 50 to build the game, it's going to be incredibly difficult. And we saw that this week with Star Atlas. They announced their I don't know how many they announced in this specific reorg, but they've dropped 75% of their staff and they're desperately looking for funding. Like, the apps are coming, but I think it's also just a terrible time to be raising for an app, because you have to be able to prove success and you have to be able to prove usage to get the valuation that you had last time, or to be able to raise any capital whatsoever. So I think it's also just like really simple. Infrastructure can get funded right now, whereas apps are having a tough time.
Yeah, you might be right there. Another take that I had as well. This was a little bit more on the. I sort of walked away from the conference thinking interoperability was still a pretty big problem, especially between. It's like the good news and bad news. Like, different L2 ecosystems, like different stacks. What it sounded like from a lot of these guys who are building these protocols is that there are two problems, which is one, there's not an agreed upon set of standards. It's hard to agree upon that set of standards because everyone's built their own. And it's like, well, if we're going to use one, it should be mine. So there's this sort of strategic incentive not to do that. But then also because in order for there to be a set of standards that everyone agrees on, there probably needs to be some amount, like something enshrined on Ethereum, actually, which just takes a really long time to do. But the good news is that interoperability seems to be solved within these layer twos, which is like a ZK stack, like all of these different app chains that'll, like hyper chains or whatever it's called, that'll be built will be interoperable. Same thing with OP stack app chains, Arbitrum orbit chains, whatever it is. So that was kind of good news. But the big friction in between, the lack of interoperability between big L2 sort of roll up environments, is that market makers and builders are going to be the ones that kind of step in and abstract away that complexity. So you can see it like.
I don't know. I thought that Chainlink CCIP was a pretty huge announcement. I mean, that it is exactly getting into the problem of how do you build a cross-bridge messaging layer between, an OP stack versus a ZK stack versus ETH L1. I mean, to go back to it, I think Synthetics is going to be one of the first to use that protocol, and you're able to transform, Mint natively on ETH L1 and on OP right now, which is the platforms that they work on. But yeah, I don't know. I thought there was some cross-chain messaging that came out that I was excited to see, at least.
I think there is.
Cool. I was there for the announcement. Like, we've held Chainlink forever, and we've been waiting for it to get past kind of just like price feeds and on to. I guess that's like a broader theme for all of the OGs, the projects that are like doing well, that have like real usage. Is like there's kind of this conception of, just to borrow from Maker, like end game for everyone else. Like, it feels like CCP is the end, CCIP is the end game for Chainlink. It feels like Infinex and all these front ends are the end game for Synthetics. It feels
Uniswap
like
X.
Right, Uniswap X. It feels like people kind of like, put the final chapter on the table, or maybe not the final chapter, but like, the bridge that would lead them there. And at least for Chainlink, it was like I was there with Sergey and Kane before the announcement, but it was kind of just like this feeling of like, finally. Like, it's, and it makes sense for Chainlink. It's like the Internet of Contracts. There's going to be 1,000 L2s. It doesn't really make any sense. Like, you want to know where everything is living. You should connect it, be blockchain agnostic. Like, they already have all these tie-ins. And so I think like the winners are just going to really compound their advantages here. I'm a little bit more suspect on like the newer infrastructure. I'm sure that things like Espresso and Suave and the monolithic stack are very interesting, but like they're playing catch up to a large degree. The other takeaway I had just from everything is like there's going to be so many interesting things that you can do with your ETH. You can stake it, you can put an eigenlayer, you can, in the future stake it with Espresso or stake it with Suave, or like there's going to be more restaking systems. Like, it does feel like there's just a lot there with ETH in a way that in previous years it was not as ETH centric. It was go to Solana, go to AVAX, go to Luna, go to Anchor, whatever. So it was cool to see that.
Yeah, I agree with all that. I think I'm actually pretty starting to get kind of bullish on the DeFi 1.0, like OG guys. Actually, there's I think we're within 1 week of remember when Degen Spartan started that like 3 years?
August 2nd, 2023.
He started in November, which was like 6 months early before like DeFi went up like 10x before the bear market started. But I was just like, fuck, this guy's calling it, and he knows what he's talking about too. I was like, this is probably not good on a long-term time horizon, and a lot needed to be fixed in DeFi, and everyone was just incredibly just cash flow negative. The economics were upside down, but now you look at the OG protocols, and it's like
they're fixing it.
Fixing or fixed. SNX like did a $500 million, $600 million day the past couple days. If you stake SNX, you're earning 30% APY. Like, that's a real cash flow protocol. Maker's spitting off, I think, like 100 million in earnings. Lido is close to 100 million of ARR, and like they added, I think it was the 25th. They added 100,000 ETH into their liquid staking protocol in one day. So like these things are all working, and then
That's wild.
And, it's wild. Like, they're growing so quickly, or they're already so profitable. And like, again, if you were dropped in crypto and you didn't know anything and you were told to point to the endogenous profit centers, they would be liquid staking, derivatives, and stablecoins. And that's where like the OGs have really prospered, and it feels like there's a lot of room to run. And then kind of like, there's Uniswap too, but then beyond that, it's like there's a big distance between 1 and 2 in each of those categories.
I would add to that Spot Exchange, just historically.
Yeah, that's Uniswap, but
exactly.
Even Uniswap has this new end game.
Right.
Uniswap's kind of crushing it, actually. I think they have like all the layers of the stack. It looks like they're trying to do. It's like they've got the front end, and they've got the consumer wallet. Then they've got Uniswap X, which is the aggregator. Then they've got Uniswap V4, which is the liquidity layer.
Right.
It's like the only thing they need. And I actually do wonder if they've thought about this is the settlement layer below it, which would be their own chain or their own roll up or something like that.
I mean, I'm sure that's V5.
That's got to be right. Yeah. But like, dude, they're kind of, they're they're
The winners are keeping on winning, and like I remember in 2016, I was like, "There's literally no shot we're gonna be trading Bitcoin in 3 or 4 years. Like the market's totally gonna change. Like ETH probably is gonna get knocked out. It's like just like it's the same ones." And Michael and I talked about this with Apple, where it's like if you wanted to play like the iPhone revolution and all the apps, like what should you have done with knowledge of hindsight? Probably just buy Apple.
The math is from the time that the iPhone was announced until today, Apple has done a 65x. There's no series of 1 to 2 venture funds over that period of time that have also done a 65x.
When was the iPhone?
It was announced in, I think, March of 2007, launched in June or July of 2007.
That's crazy.
So 15 years or 16 years, it's 65x.
When I was in like 6th grade, my dad was like, I want to get you into investing. So you pick a stock, and I will buy that for you and we can track it together. And the iPod had just came out. And I was like, I want to buy Apple. And my dad was like, all right, we'll buy you some Apple stock. But he thought it was overvalued, and he bought he bought like Polymer, like Rochester Polymer or something. I'm
sure that bad boy ripped. Don't sleep on Rochester Polymer.
Yeah.
When you're like, I'm sure you didn't know this at whatever age you were when you tried to buy Apple with your pops, but like when you're thinking about something that can, literally change the structure of, the human fabric, optimizing for like price slippage or like is the RSI oversold or like just fucking buy it.
I remember we had when I was in college freshman year, this guy came in and he big like New York hedge fund manager, and someone was like, where do you get your like info? Like what's the best source of info on like how you like what like do you read research or whatever? He goes, you know what's best source of alpha? My daughter. He goes, you know what I bought? I bought Apple when my daughter started and all of her friends started requesting Apple, the iPhone. You know what else? I bought Snapchat, or I invested in the like second round of Snapchat when everyone started like using Snap, and he just had like 5 of those examples.
I've got that exact story. There's a guy named Barry Eggers who is a partner at Lightspeed for a number of years. I don't know if he's still there. His 15-year-old daughter went to St. Francis High School here in the Bay Area, and she and all of her friends just became obsessed with Snapchat right when it launched, I think in 2012 or 2013. And he basically, his daughter comes to him and says, you need to look at this. You need to invest in this. And so that's how Lightspeed did the seed round. Coincidentally, the endowment for that high school put in, I think, $25,000 at the seed round, like the initial capital that came in. And it like was on the cap table when they went public. Pretty
when
crazy.
was Snap founded?
2011 or 2012. I think they started working on it in 2011 and then founded in 2012.
Just to call it, it's been now over a decade without a new consumer entrant that has had staying power or scale.
I have another crypto question to tie back to EthCC for a second in crypto. Mike, you were mentioning like one of your takeaways was interoperability will work, but it won't be like on chain. Basically, it'll be market makers and funds become the main bridges in crypto. Can you just expand on that?
I had this is actually, Michael, you mentioned this in Uniswap X, and the connective tissue in between different chains is these market makers that like there's an RFQ sort of model where actually Brian, I'm gonna blank on his last name, the founder of Layer Zero. But he had a great quote, like bridges solve an inventory problem, which is you want to do something on chain A, like move something on chain A or transact on chain B, which sounds a lot like market makers, right? Like they warehouse risk and they manage inventory, and like that's how they make their money. And there's like 3 big forces you can kind of see they're driving towards like frankly a huge bull market for centralized builders and market makers to abstract a lot of these problems away. One is like the way that there could be interoperability between different layer 2 ecosystems is shared sequencers, but sequencers are just pipes. They're really good for inclusion. So they can sequence, but they're not stateful. They don't actually execute transactions and they aren't aware. In order to like really get the full benefits of interoperability, you need a very large, expensive builder to sort of plug in and execute these transactions. And then it would actually be a really useful tool. So there's an incentive for like an SCP or someone to do that. And then there's the proliferation of these, like, is actually CalSwap that was kind of the first, these intense-based DEX designs. There's CalSwap and Uniswap X. And the end game of intense is like what Anoma and like Chris Goes is building. But in the more intermediate, basically what they're saying is like, hey, instead of like, if I want to do a transaction that has multiple different steps, I should just be able to express the end outcome. And then I'm going to farm that out to a whole bunch of different sophisticated on-chain actors that will then go and execute that against some, best execution sort of benchmark or something like that. And they will then manage the complexity of interacting on different chains. So like there's a big incentive because Uniswap X and CalSwap exist for these like solvers or fillers or things like that. And there's another one that Vitalik explained. He gave a big talk on builders and why we need them. There's something he called it like aggregating proofs, right? Like he's very obviously bullish on like ZK Tech. Once you like make a proof about one thing, you can aggregate all of those into like one thing. You can have many, many different layers of proofs, and the end state is like one relatively computationally expensive proof, but you can also like, it's not enormously variable based on the amount of like roll up proofs into that. So it sort of shifts the cost structure of transactions into being higher fixed cost, which is good. It's cheaper overall, but it's a higher fixed cost thing that's good for, again, big builders. So that was kind of my takeaway is if you like, I actually don't think that's necessarily a bad thing because that's the whole reason you have PBS. You've separated the proposers from the builders. So I think it's a pretty acceptable compromise actually to give users a much better experience while we sort out the technical stuff. But that was a takeaway for me. I don't know what you guys think. Sorry, that was a bit of a monologue.
I think the thing that will be able to do cross-chain the best comes down to two variables. One is just sort of like a table stakes. You have to have native minting on each ecosystem. You have to be able to say this is canonical USDC on Avalanche, on base level ETH, and L2 ETH. And that's going to happen across every asset that you really want to have cross-chain functionality. And then the second variable is going to be fees. And if you're going through a market maker or some third party to be able to facilitate that transaction, there's obviously going to be some fee that's associated with it. This is actually where I think cross-chain communications or messaging protocols, if given the ability to have native mint functionality for those assets across those two different ecosystems, you're burning on one end and minting on the other. And so long as you trust in that network, that information protocol, you can have lower fees, I would say, than someone who's having to do inventory management across, like, if you've got a market maker across Avalanche and Ethereum, it means that they have to have enough assets on both sides that they're holding on to be able to facilitate that transaction, which means that their cost of capital is going to be a lot higher than just a messaging protocol. And so we're not there yet with the messaging protocols, but I would say that moving in that direction is probably where I see things going. But yeah, no, I hear you. I mean, in the short term, like I've been waiting for let's say the Coinbase ETH to optimistic ETH bridge, 1-for-1 swap, just like you have with USD and USDC on Coinbase for, a year now. Where's that?
I agree. I'd agree with all that, Mike. One thing I would say though, if there's a big hedge fund that like a bunch of flow ended up moving through, basically you could find ways of monetizing that, I'm sure. Like totally. In pretty creative ways.
Yeah.
Like one of the big problems for a lot of like on-chain dexes is like the price discovery happens on Binance and ETH has 12-second block times. And there's this problem where all the prices are basically stale and LPs are subsidizing an enormous amount. They're basically just making bad trade after bad trade after bad trade every 12 seconds. And the fees don't really make up for the amount of loss they incur doing that, which is a problem. And I think it will get solved. I think price discovery will move on chain. And once that happens, it will solve an enormous amount of other infrastructure challenges that are just occurring because of Binance. And that actually could be a silver lining of, frankly, the SEC's like over exuberant like take on Binance. Like probably isn't good for the industry for Binance to be what it is, I would guess. But
I think price discovery starts to move on chain once you have a structural bid on chain, and that's just a way of saying once token buybacks start of a lot of these protocols that are profitable, the Uniswap fee switch is like step one, but then actually either buying the tokens back or giving it to the fee people on chain is the other. Once that happens, I think most of this volume is going to go on chain, at least for those tokens, and then it's really not going to go back.
Should we talk about Worldcoin a little bit?
Let's talk about the orbs. Yeah, no, did you scan your eyeball?
I scanned.
Wow. So you claimed it as
Didn't
well?
you?
I did, but I was wearing contacts, and so they were, not happy. With
Oh,
the
that
result.
doesn't. Oh wait, actually, that might have been why mine didn't go through. I did scan and I was wearing contacts and it like was very janky. It didn't really work.
Yeah,
I had a
Did you
protective
claim-
shield on.
yeah. You had your mask on. Did you claim your
Yeah, your fingers crossed when you're,
Yeah,
when you're getting your iris scan.
Yeah, claim. Yeah, of course. I'm in it.
It's wildly bullish for optimism that they chose that chain. Like, it just
Yeah.
also shows how early we are in like the L2 like wars, skirmishes, whatever you want to call them. But you get one app that's hot, and all of a sudden you have the same amount of transactions as Arbitrum, and you close the gap entirely. It's interesting.
Yeah. Yeah. So Optimism just passed Arbitrum, I think, in daily users for the first time in several months, right? Today or yesterday.
Was it users or transactions?
Or transactions.
The context for Worldcoin is like it's a proof of personhood system. Vitalik actually wrote a really good piece about that this week. And there's like kind of different ways of doing that. And there's reasons for doing that. Like you could do Worldcoin as a biometric sort of solution where there's a set of public and private keys that get generated. There are these orbs that literally just, I guess, exist in various places around the world. And you can go and scan and it will match up. And you have to, at the same time you scan your irises, you also have to present your app with your public key. And then a hash will get created that's entered into the database. So what it says is that it doesn't store your actual iris data, but it's linked to that specific hash, and then you can prove if that unique hash is in their database. And that's the way that it works. There are other methods, which is based off like a social graph and a vouching sort of system, where Alice and Bob are real. Mike gets added to the chain. Alice and Bob are like, yeah, we believe Mike's real. And like, by the way, here's a penalty in case we're like lying about you. And there's some sort of challenger sort of system. There are like various pros and cons to each one of these things. I think Worldcoin specifically has been, there's been some pushback because of the token allocation they had. There's like 20% of the tokens were allocated towards investors and the entrepreneurs of the system. The problem with hardware is that it's really hard to prove that there isn't a backdoor. You just can't really prove that. And I think understandably the human element of like, scanning your eyes just feels very 1984. It's hard for me you can explain it all you want to me, but I still get a little heebie-jeebied out by it. So, I don't know. What did you guys think about the whole project?
I went into WorldCoin's office in February or March and met with Alex, their co-founder, to like get the full pitch. It's something that we do every day already. So proof of personhood is like a very important thing that we already do every day for a couple of things, right? Like if you've ever signed up for a CeFi exchange, like you remember, like you take a picture of your license,
Oh yeah.
hold it up to your face, and then like send it over to like Binance, where I can assure you they're not keeping that thing safe. Like that
you,
is
you have to
proof of-
write like the proof of life as well on the piece of paper. Today's date.
Literally today's date. Yeah, that's proof of humanity. You're moving too quickly online, and you have to like fill out a CAPTCHA. That's proof of humanity. You join if you ever like raise money, and maybe you need to like get a big wire, or you're sending a big wire or something like that, and you have to jump on a call with someone, and they have to like verify you as they send the wire. Proof of humanity. So like proof of humanity is something that you have to do every single day. And then the last one is your iPhone, right? Like you scan. This is more like less proof of humanity, but more just like privacy and security. I don't use the touch thing on my iPhone anymore. I like probably 90% of people just use face scan, and I'm sending that over to Apple. And that's so like we're doing that every day, basically. The thing with proof of humanity is that it's not something that occurs that often. It's like you don't have to do a CAPTCHA online that often. You don't have to do a send a picture of your license to an exchange that often. What Alex, the Worldcoin founder, laid out for me is like a world where you have to do that hundreds of times a day, basically. And if you think about GBT, so where like GBT, so Sam Altman's the co-founder of Worldcoin. He's also the co-founder of ChatGPT, OpenAI, which founded ChatGPT, or which created ChatGPT. ChatGPT right now, you put in like a prompt and it spits out a thing. What ChatGPT will eventually look like is not just like giving read access, but write access to your computer. And so what that looks like is, imagine ChatGPT 6, for example, or ChatGPT 7. What you're going to do is you're going to give write access to your computer. And you say right now you're not going to do that, but eventually you're going to do it because all your colleagues are doing it and they have a huge competitive advantage on you. It's like they're all taking steroids and you're not. So you're going to take the steroids. And you're going to basically be able to put in, for example, hey, pull up MetaMask. I know that GMX is launching a token. I want to farm GMX. Go use the 10K in my MetaMask account and do the optimal farming strategy on GMX to farm for tokens that I think are coming in 3 months. And it's just going to do it for you. Or you put in a little prompt, hey, go email Vance that I need to push this. Boom. It's going to pull up Gmail for you and write the whole email. And when that world happens, it's very tough to know online who's a human. There's no way to know who's a human and who's not a human. And WorldCoin's trying to solve that problem.
There's a story I heard. I think it was a couple of Stanford researchers who it wasn't the AI model that ChatGPT runs on, because it has the ability to go off and actually prompt different things in a computer system. And so they're testing this new model, kind of similar to what you're talking about, where it has access of the computer. And the researchers say, here is an account, and I don't know if it was a bank account or if it was a brokerage account, but it was, here's an account with $10,000. Go off and make as much money in the stock market as possible. And that was what the prompt was. The AI went off, signed up for a brokerage account. To get the brokerage account, it had to go through some CAPTCHAs, wasn't able to get through the CAPTCHAs. So it went on to TaskRabbit to hire somebody to get through the CAPTCHAs for them. The TaskRabbit person even said, how do I know that you're not an AI? How do I know that you're not an NPC? And the AI literally said, I'm like, I have visual disabilities. I can't do this myself. I need help doing it. Convinced the person on TaskRabbit to go through the CAPTCHAs for them and started trading stocks.
Like that's the world. That is no 100% locked in my mind. That's the world we live in. Everyone's going to have an AI assistant, and that AI assistant is going to run a whole team of other AI assistants. Yeah. So like my AI assistant, I'll be like, I want to go build a website, and they will go reach out to the other AI assistants that go build the website for them. That is a 100% fact, the world we're going to live in. And in that world, we need like proof of humanity. I do see the picture for this. Now they really fucked up the launch. Like the token, total botch, calling the orb an orb is like so cool, but so dystopian. Like so many, if I was running the marketing there, I would have done it completely differently. Putting the first things in like Nigeria and like, I was like, come on guys, like you're just, like horrible marketing and comms there. But I do understand the problem that they're trying to solve.
The problem is absolutely gargantuan. There's no question about it, and absolutely necessary. It's just the question of the implementation and, frankly, timeline. Like, when are we actually going to need this?
You already need it. It's like, think about crypto. I mean, so you don't need what we're talking about with ChatGPT and stuff like that, but like or GPT 6 and 7. But think about crypto, airdrops for token distributions.
You can do Sybil resistance with it. I get that.
Sybil resistance, protection against bots, like just a better alternative to CAPTCHAs. There are some short-term applications.
You know what? I think, this might have come up on the podcast that you did with Chow, but this feels really bearish for the Web 2 business model, right? Wasn't this partially why Elon limited the amount of like posts you could view? Because now there's just going to be exponentially more web traffic because of these AIs, and that puts an additional load on the servers. It's cost, but then advertisers aren't going to pay for AI traffic. I mean, that's brutal for their model.
One of the interesting takes that I heard about AI is that it effectively structurally increases the costs of basically every application that runs on it. So like, imagine you're Twitter and you want to, make your site AI capable. We can debate what that means. Maybe it's, having an AI write your post for you. Maybe it's having a ChatGPT plugin in the app. Every time you write a query, every time you ask it something, that costs a shitload of money. And there's a run on GPU right now in Silicon Valley. Like people are trying, it's like, selling drugs. People are trying to find these, I think it's the HN100s from NVIDIA and get them stood up. But like it's gotten so expensive that like it's become prohibitive from a cost perspective to build an AI app. So that's one side of like the balloon getting squeezed. The other one is just like you kind of need to put up these guardrails because every AI application is just going to be constantly trying to scrape your site for more and more data. Your server's getting pinged, your costs going up. It's like it structurally decreases the margins of basically all of these Web2 tech companies. And so that's not that bullish,
Well, structurally.
if you think about it, it's like
Landed the plane there, Vance. You're absolutely right. It is not that bullish.
AI is going to do great for all the Web2 companies. It's like, is it really? Are they going to grow that much faster? Maybe the bot traffic will.
The big one, and oh god, I think the pricing I can't remember. Does anybody remember the initial cost that Microsoft came out on their earnings call for Copilot? It was like 3 times analyst estimates. I think it was $30 per user per month, and it was supposed to be like $10. And I think that is lending credence to what Vance is saying. It's like their cost structure, which they need to maintain their margins on, like they're not going to be able to make money. And I think there's going to be a demand at $30 a month. But you really do have to change the business model of consumer applications in Web 2 from being if you're not paying for it, you are the product. Well, that advertising-based business model is not going to work in an AI-dominated world.
Let's just play this out a little bit more. So, like, do certain business models not work in the age of AI? So, like what would be the ARPU of a user on Twitter that's being served ads? Like, what do you think that would be? $10
in the US,
a month?
In the US, it's 12 to 14.
Right, 12 to 14, and Twitter is $8 a month. On the subscriber side, like maybe this kind of makes the advertising model. Maybe the advertising model doesn't have enough juice in it to overcome the additional costs, provided by AI and AI powered data scraping and AI powered applications. Like it kind of throws a little bit of that into just the air. And like you look at Snapchat and that thing can't even turn a profit with the advertising volume. And they have a ChatGPT plugin. And I'm sure people are going to start scraping their website for ChatGPT data. It's like, it really does it poses a lot of interesting questions as to like, what do these business models look like long-term? And subscription may be the only way that you can like really control and scale your revenue to these new costs.
I mean, think about it this way. The gold standard, and this is probably a year or two outdated, but the gold standard is Facebook for North American users, and it was $20 a user per year.
No shot that's enough for AI, if that's really
no way
server costs. And just
you're gonna have to double that.
I have a question for you guys. My understanding of the reason there was the advertising-based business model for a while is like people in the early days of the internet weren't going to like pay to go online. That was just a complete non-starter. Do you think now, if there was a switch to a subscription business model, like generally across social media sites, do you think the majority of people would pay?
Majority, no, but it doesn't matter.
Yeah.
So Snap has 3 million, I think, paying users. So like, I'm a Snapchat Plus subscriber somehow. Just because I wanted to use
that says a lot about you.
I think we need to hear more about that.
Kids, I'm trying to stay young. But 3 million is not enough. They've got like 600 million users, 700, something like that.
Not that many DAUs though.
Right, like
250 million DAU. It's like 1% penetration of their daily actives.
Right. And a lot of these things were in trouble already. Like I was looking at the Snapchat earnings, which just absolutely were the opposite of Meta, and it just feels like a bi-quarter thing where they just get smacked. So they're a $18 billion company. They have emitted $9 billion in new stock since launching in stock-based compensation. They've never turned a profit. And there's really no path for them to increase revenue either. They're not really growing as fast as they used to. There's really no new business models, and their costs are increasing because of AI. And, the revenue is decreasing because of Apple squeezing them on the other side.
As a recipient of said stock-based compensation, I think that everything is totally fine.
I'll lay this economic driver on top of a social driver that I think is going to drive this too. I think that if you talk to like Gen Z and the youth of today, I think there's the youths. I think people are driving into there's a desire to like move back into like deeper, more private spaces online. And if you like, how much time do you guys spend on Telegram chats today versus how much time you're spending on Telegram chats versus like even 2 or 3 years ago? Like a lot of my day is inside these Telegram chats, or Slack, right? Or I don't use Discord, but like, a lot of time is spent in these like kind of more private channels, versus on social. Whereas like my whole life used to be on like Instagram and Facebook 7 years ago and stuff. So, and I think like if you think about what AI will do to social media, the like impending signal to noise ratio, there's gonna be like a crisis of signal to noise, I think, on these social platforms. And I think it'll continue to drive people into these more like private spaces.
When's the last time you guys went on Facebook.com?
A decade ago.
I
shut mine down like 8 years ago, I think, or 6 years ago.
I went on it like 2 months ago. There's like literally 3 times for every single organic post, there were 2 ads.
Yeah, and it's a really uncomfortable feeling. Like I'm just looking at my Twitter right now, and I'm sure you guys have this as well, but my replies are just like shitloads of bot responses, scams, phishing, Ukrainian, Russian women. It's like, wait, what the fuck is going on here? This just like makes me not want to spend time here. Or like figure out a Telegram chat that's a little bit higher signal, or a Discord. But I think
next up, you're going to have Elon limit the number of tags you can put into a tweet unless you're blue check mark. That's
wild how clairvoyant he's been on this stuff. Like, sure, I don't think the delivery was perfect, but like he kind of called all of this happening. He hasn't fixed any of it yet, but it does feel like this is the direction of travel.
Do you think maybe he just kind of came in, and I don't know what his original impetus was for really buying Twitter, but he is, for all his faults, like he's definitely good at just being like, this is the problem, and like forcing uncomfortable things forward, it feels like. So yeah, I feel like he did kind of get that. Do you think?
Imagine building rockets with him. That would be just another experience.
Yeah, I don't know if I'd want that on it. Like that'd be like a pretty brutal couple of years, to be honest with you. But yeah, I guess they did build the rockets, so
I'm really happy that he owns Twitter and that he's able to disseminate free speech and crypto and openness. And I don't like the X brand, but I feel like even in time, that'll probably be optional.
This is kind of a funny aside. X is what he's been trying to call his financial services platform since 1996. He started X.com, for those that don't know, in 1996, which then later merged with Peter Thiel's Confinity to create PayPal before it was sold to eBay. And then as he was leaving, part of his severance package was he renegotiated with eBay to buy back the X.com brand, and he's literally been sitting on it since.
And I'll add to that. He named his kid X. He called it Space X and Tesla Model X. Dude loves X.
I just like this resonates.
Yeah, I mean, our office is kind of near the Twitter building downtown. I drove past on the day that the Twitter was being taken down. It really did feel like the visceral end of an era, because Twitter was like kind of like one of the prototypical early tech companies that came out, and
especially in San Francisco, like Twitter users were just like SF tech bros, like tweeting what they had for breakfast. Like
it was also Twitter's the first major company in San Francisco, first major tech company in San Francisco because of Jack.
Right.
And then everybody followed.
And there he was with a crane or whatever that was, just wild. I know. What a guy.
Elon's very good at getting people to talk about his stuff. In one way or another. It is like, it's not overdone comparison, but this is what Trump was good at too. Like, you were just always talking about that guy. And if you've ever tried to like put something out into the world, you know how hard it is to just get people to care at all. He has this sort of ability to just like, he just knows how to shine a flashlight of attention on stuff. Even this X thing, we're talking about it.
Okay, so I went on to the Twitter Spaces on Saturday night as he was literally like, "Whoever's got a good idea, we'll implement it tomorrow." Well, he was on the Twitter Spaces, and he was playing Diablo in the background the whole time. Where he was like, "All right, we're changing the logo." He's like, "Yeah, I've been playing Diablo for the last 2 hours. I'm probably gonna play for another 30 minutes and then go to bed." Like, he literally
one of us.
Exactly. I think he really just like doesn't give a shit, and he also just wants to do whatever is the most comical. because he thinks it's entertaining and fun. And I honestly think that that's probably like where the impetus to buy Twitter came from. Eventually it was like, okay, well, we should actually probably do this. But at first he's probably like, wow, wouldn't it be funny if I did that?
What a G.
Probably. Let's bring it back to crypto here a little bit and just talk about this sort of battle that's playing out on Capitol Hill. So there have been a couple big, very relevant bills for, well, actually, even to set the context before that, it does feel like there's a little bit of finally resistance moving in the direction of crypto in Washington. This was after like an onslaught of different, I mean, what have we been talking about? These enforcement actions for the past couple months against Binance, against Coinbase. There was a concern that all of these, many of the crypto assets out there are going to get labeled securities. And what it sort of subjectively feels like, especially after the XRP summary judgment, that the tide is beginning to move in the other direction. And this has been a totally partisan issue. Like this has been typically, the Republicans being relatively pro-crypto, anti-SEC, and the Democrats being anti-crypto, pro-SEC. And now you're starting to see some prominent Democrats come out and say Gary Gensler has gone too far, to paraphrase. So,
I mean, isn't it crazy that the Republicans are now the progressives trying to get new laws and regulations passed, and the Democrats are the obstructionists?
Wild. Yeah.
So yeah, we're members of the Blockchain Association. We kind of like worked with them and everybody else who's a member to work on Capitol Hill related issues. The stuff that's going on right now and where things are working their way through is just frankly, like, as all of this happens, a negotiation. And it's people wanting to get one word changed or a sentence added or rejected, and there's amendments to it. It's like back to civics 101 of like how a bill gets made. But I do think, the sentiment is that yes, it's partisan. There is now sort of some contingent across the aisle to get some stuff done. But most likely it looks like it's not going to go through in this Congress. And the Ripple case is great. Like that gives us a feather in our cap. It's the new standard for certain aspects of regulations relating to crypto, not for everything, as everybody wants to go off and project. But frankly, there just wasn't enough time in between the Ripple case happening and these bills being drafted for them to take a huge effect in the creation and what is getting put into the bills. And so I think that's where there's actually some just like issues. Like this stuff is happening on a day by day, night by night basis in terms of amendments and negotiations. And so my hope is that, probably this stuff gets far enough to where it already has. So the FIT bill, which is the Financial Innovation and Technology for the 21st Century Act, it's the first time that crypto has ever been in a standalone bill and not stuffed into some omnibus, whatever, or the Inflation Reduction Act. And it's a standalone bill. It has passed 2 committees in the House and is going to go to a House vote on the floor after the August recession or after the August recess. And that is a huge, huge moment for us. Will it get through the Senate? Probably not. But, as the tide shifts in Washington in terms of who's in office and who is not, there's more likelihood that this stuff will come with more, negotiations, amendments, and then it'll have a new wind probably in a year or a year and a half. So there's a ton of stuff going on with all these different bills, but what the one that we think is most exciting is the FIT bill, which used to be known as the Market Structure Bill. It passed the House Financial Services Board Committee and the Ag Committee. Like it definitely has a lot of momentum. The interesting one is the stablecoin bill, which as of today seems to be met with vitriol, as was described in committee chambers, where the White House seems to have come in and basically put their foot down and said, no way. We were actually thinking that it would be the opposite, that the stablecoin bill, pretty mundane, pretty standard, just basically provides safeguards and assurances for centralized operators of stablecoins. Reading the tea leaves or according to some rumors, White House / the Treasury came in and said, you got to stop it. So that's kind of where we are.
Why do you think they did that?
CBDC.
I think a lot of people were surprised at how many Democratic votes the market structure bill got. And so there was probably like oh shit, we should really put our foot down on this other thing. even though Maxine Waters and McHenry look like they've agreed on something, it looks like this is just like the political pushback that comes with more votes going to the market structure bill than previously thought. But as Michael said, this is like pretty bullish for the entire space. Like this is going to be the legal framework that exists when a bill gets pushed through. And if there's a change in the Senate, there's a change in, the presidential, who's president. Like these are all things that'll happen pretty short order in our opinion. But like until that happens, we've got Grayscale, which looks pretty good, Ripple, which, changed a lot of things for the industry, and a general feeling that the courts have the backs of the people who are not, doing things with malintent. So feels good, honestly.
I listened to a couple of the snippets of discussions and conversation and points that were made yesterday in the House committee chambers. Richie Torres out of the Bronx in New York has just been absolutely crushing it. Democrat, super knowledgeable about the space, very pro the space. And his perspective was great, which is you've got on one hand the SEC and everybody saying that they have enough rules and regulations to go off and regulate this industry. But at the same time, you've got the largest, what looks to be a crypto Ponzi scheme and fraud committed in history of crypto. You've got all these different regulations. They're not winning all of the lawsuits that they're bringing against the industry. And there's just outright confusion. Meanwhile, you've got other jurisdictions, particularly within Europe and MiCA, which are providing safeguards and paths forward for how to regulate this industry. And so I think that is going to be the sentiment. There's 6 Democrats on the House Financial Services Committee that voted for the FIT bill, the market structure bill. And yeah, to Vance's point, I think people that want to see crypto go away got nervous when they saw that vote outcome.
So outside of just general sort of, concern, why stablecoins? So stablecoins, I feel like, are so obviously beneficial for U.S. interests. I don't feel like that's a huge leap to understand. I mean, you've got this other sort of financial system, economy, pseudo, however you want to frame it, and the dollar purely from market forces, right? This is purely bottom up, like needs, want driven, is being adopted there at a rapid pace. And the US was just like, no, thank you. We don't want to take this free option on
One of the
reserve
guys,
currency of this system.
one of the Democrats who walked out, somebody asked him, why'd you walk out? And he was like, I was told to walk out. Like, these people aren't thinking for themselves. It's just it's a political game, but I think it's being played in such a way that crypto eventually comes out on top. I wouldn't really read too far into the temporary holdup of the stablecoin bill. It could even really get done after the recess. That's kind of like the scuttlebutt. But these things go from no, absolutely not. I heard some guy call this an unjust and cruel bill. Stablecoin bill, what?
An unjust and cruel bill, and then made an amendment attempt to the same person made an amendment attempt to have a 120 day exploratory period for new regulations. It's like, dude, we're talking about it right now.
Yeah, I wouldn't place a lot of stock in the day-to-day stuff. These are the regular season games, and I think the playoffs are probably later this year / next year.
My guess is, well, as soon as December hits, it is election season. My guess is if it doesn't happen before then, it'll probably get pushed to the next Congress, which is actually a really good thing. I think that having it get pushed probably will give us more time to circle the wagons, get some more wins for the industry, have a better understanding of where things stand. And it'll just be more evidence, to Vance's point, which I totally agree with, is we're going to be on the right side of regulatory history here. It's just we need more evidence to get more people on our side.
We're moving the ball up the field, to use a football analogy, but I think we're in a good spot here. I'm not too worried.
I have a 2024 question for you guys. If you are a one-issue voter and crypto is your issue, who is the number one president right now? Is it DeSantis or RFK or
Trump?
Well, Trump. The answer.
Only
Trump?
one presidential candidate has multiple NFT collections, along with his previous first lady.
I mean, this is with the context of like who's actually got a shot.
You don't think Trump has
and-
a shot? I think he's
No.
He's saying
No,
Trump does have
no.
no.
I think obviously RFK would be pro crypto.
RFK would be great. I would vote for RFK in a heartbeat. I just don't think that's going to happen.
There's not going to be a chance to, frankly.
I'd love if Cornel West was president. I don't think we're going to have that happen.
Yeah. I mean, the other interesting part is, what whoever the Republican candidate is, like, it looks like Biden is still going to be the candidate unless, something pretty serious happens on the Democratic side. But it will be really interesting, whoever the Republican nominee ultimately ends up becoming, who they build as their camp. Like, who's the running mate? Who are the people that are in support, who are vying for potential cabinet positions or what have you? Like, there could be a groundswell of interest from some of the candidates that we're talking about and thinking about right now.
Do you remember what 2020 felt like with the election? Everyone was very focused on the future. Everyone could see 4 years of what each candidate would look like. Like, it feels good that we're going to start thinking about the future again. The Republican debates are, I think, in 2 weeks, 3 weeks. And I think once that happens, that kind of kicks off, people starting to think about the future.
Man, I could not feel more differently about that. I am not excited for 18 months of just every single fucking day just talking about the election.
I feel like candidates like RFK have opened the Overton window for people to really think differently about what the future looks like. And it's not just like Trump versus Biden. It's like, who is this RFK guy? Like, what? Like, the vaccine.
It is funny.
Shit?
I do feel like RFK is like this year's. Oh my God, who's the AI
Ron
guy?
Paul, honestly.
No. He's the guy who's very scared of. He wanted UBI. You know what I'm talking about.
Yang? No, he's way more credible than Andrew Yang.
Yeah,
It was Andrew Yang. I have a small issue that I would like to see. Dude, I don't know, Vance. Yano put this in my head actually before I went over to Europe, but the food over in Europe, like I had like a chocolate croissant every day. Like, to start every morning, I had chocolate croissant.
Okay, bro.
Like, steaks, yeah, and whatnot.
Mike had like 7
a
day, just 7
I felt
chocolate
light
croissants.
on my feet. I felt light on my feet over there.
You look light. You look good.
Thanks, buddy. You do too.
Seriously? Thanks,
But
bro.
in the US, like, if I have like, an extra thing of bread with lunch, I'm like,
I'm obese now.
Afternoon.
yeah, I'm obese. I'm obese. That's it.
I know.
Yeah.
It's like-
Afternoon cancel. I gotta take a nap. We gotta fix this food over here.
So the cool conspiracy theory that I read yesterday was that Trump and RFK are like secretly teaming up, and then RFK is going to be the FDA, head of the FDA.
He already asked him to be the head of vaccines in 20. Listen. In 2017, I think it was 2017, when right after Trump got elected, he asked RFK if he wanted to take a health role within his administration.
I think the candidates are very interesting. I've been all over the map politically. I've voted liberal for a long time, Republican a little bit, independent. I volunteered for Ron Paul when I was young, so like all the way from auditing Fort Knox to find out where the gold is to like more centrist positions. I just think there's a lot of very interesting candidates in this election, and like I'm hoping, Yana, to your point, that it's not going to be this like drag through the mud. I guess with the court cases, it's going to be, but
yeah,
it's time to think about the future again.
The other one that I've started to listen to a little bit more of, do a little bit more research into, is Vivek, and he's 37 years old. Get that? Like, he is basically our age.
What's the cutoff for president?
35.
35.
And he's probably he's probably the highest IQ candidate that we would potentially see. It's just, that ability to have someone who's out of left field, high IQ, high horsepower, and not being an establishment person, I think is frankly what it is, the Overton window shift that RFK has provided. Like, it actually gives credence to some of these dark horse bets, which is great. Like, we're actually having a conversation about it now.
Cornel West is running. Green Party, no labels, is gonna. It's kind of like, you can kind of choose your own adventure, which is exciting in terms of. At least for me, the mainstream candidates don't really appeal to me. I'll end up voting for one of them, but like,
I will
They
get to
don't-
entertain different policies for a longer period of time, which is cool.
Exactly.
Yeah.
It's like
Alright,
this every year,
fellas.
though. It's always like this.
Oh, it's not. Come on. Literally, it was Trump against Jeb Bush in 2016.
Yano's just not going to be able to talk about this outside of the office.
18 months out, you have 20 candidates every single time, and then it eventually gets narrowed down to like 2 on each side, and they're both going to be pretty institutional. And you're going to have DeSantis versus Trump, and you're going to have Biden, and then we're going to spend a year.
DeSantis is toast. I don't think he's going to be a competitor.
He didn't make it. But Newsom, I would love
Facts
if
and
he got in,
disbelief.
but he's
Yeah.
pro crypto.
The DNC has already said that they will not be participating in any debates within DNC party members and against the RNC party member.
That's ridiculous.
Wait, no Biden Trump
That's so
debates?
ridiculous.
Nope.
Mike can't even bring himself to speak words.
I've just seen Vivek on Ramaswamy or whatever on Twitter. I haven't even looked into him at all, to be honest. But maybe he could be a smart dude.
He's got some not so great perspectives, but he's just very smart.
All right.
Yeah.
Get out there.
Wrap. Peace.
All right, fellas.